Good morning, everyone. Welcome to our live daily market outlook for Thursday, 6th of December 2012, prepared by Windsor Brokers. Apologies for a small delay. We had some technical issues before starting the session, so now we're ready to go on and see the outlook for today, Thursday, with a full calendar as well as a lot of market movements and important releases due today, promising a lot of actions. As we can see, the euro continues its corrective pullback, although still seen as corrective of yesterday's fresh 7-month high at 131.25, dipping to the initial target, initial support at 130.50-40 zone, where the temporary ground was found so far, but still a negative near-term structure sees more potential for some corrective action. Basically, investors are awaiting the ECB's decision today. The sterling is also in the near-term consolidative corrective mode, slightly lower than initial support at approximately 16.90, but still holding a sort of positive tone on the larger picture of yesterday's, 2 days ago, fresh peak at 161.29. I would say at this point it's still seen as rather consolidation than any more significant corrective action. Dollar yen is aligned towards the upper boundaries of the range, but still remains firmly in range as 83 barrier still looms over the near-term price action, and basically break above the range barrier at 82.83, and the regain of 83.00 is required to signal resumption of the broader uptrend from 79.06. Dollar Swiss also is within the narrow range, with the 93 barrier firmly capping the upside and not allowing any stronger progress in the corrective action of 93.39, recent low. Oil and gold remain under pressure, as oil is currently attacking at the lower boundary of the near-term range at approximately 87.60. Zone, with the quite negative tone seen on the near-term studies, again focusing more towards the focusing the downside levels following a failure to resume gains, and the upside rejection at 90.31 that also marks the near-term channel resistance, while gold remains at the back foot after posting a fresh low at 16.84 yesterday. This is what we mentioned in our technical outlook, that a likely scenario is further extension lower, and I think these are the levels that I already mentioned, with the brief corrective action holding below 1700, now reverted to strong resistance. Key releases today, starting with the European Bank of England and European Central Bank. Let's take a look on the calendar since we are here. Just to briefly mention that already released data for today showed that Australian unemployment rate dropped to 5.2% unexpectedly. 5.5 actually increase was forecasted for today from 5.4 in the month of October. Swiss unemployment remains unchanged at 3%, but CPI dips by 0.3% in November compared to 0 in month of October, and the 0.1 increase in of inflation seen in the October. Still to come, UK trade balance for October. Forecast is widening of the trade gap to 8.7 billion British pounds compared to the gap of September of 8.4 billion. And Eurozone revised quarterly GDP for the third quarter due at 10 o'clock GMT. No change forecasted for today, minus 0.1%. Germany factory orders are due at 11 o'clock GMT, 0.9% increase compared to a draw of minus 3.3% seen in the month of September. And then we have data from central banks. I would say key releases for today: Bank of England and European Central Bank, starting with the Bank of England at 12 o'clock GMT. No expectations of any changes in the current policy. 0.5% is the rate, and the asset purchase facility again is likely to stay at 375 billion pounds, despite some speculation of further increasing by 25 to 50 billion sterling So far, forecasts are still showing unchanged policy. The European Central Bank is also expected to stay pat at 0.75%, but likely this to keep to offer more clues on its policy path for the next year, with the updated forecasts likely to present a grim outlook for the Eurozone economy in 2013. This is also based on the recent data released showing that there is no significant move towards the positive territory in the current situation in the whole Eurozone. Since announcing a new bond buying plan in September, the ECB has held off on further action until the program is activated, and that way it looks set to continue as Spain still resists pressure to request a bailout, a precondition basically for the ECB to buy its bonds. Instead, the markets may focus on the bank's new economic forecasts for hints on the course of monetary policy, as the bank is sure to cut its growth outlook for this year and next, as the Eurozone crisis has hurt the economy right to its core, including Germany, which is the strongest and the biggest economy of the Eurozone. Further from Americas, building permits from Canada due at first we have the weekly jobless claims that are more significant from US at 1330, 381,000 seen in the last week, a slight improvement from 393,000 new jobless claims seen in the past week. And then building permits from Canada for October, significant improvement seen based on the forecast of 2.4% compared to minus 13.2% seen in the month of September. Of course, the key release at this time, 1330, is the ECB press conference. As we said, we're going to see what President Draghi is going to say, but likely to, as we said, to lower forecast for the coming year, and will likely extend the unlimited liquidity offers. From Canada, further PMI at 1500 GMT for November, 58.6 is forecasted, improvement from October's 58.3, and basically that would be the list of economic indicators that are due to be released today. We're going to take a look now at the currencies and commodities, as we are late a bit this morning, so not to waste further our time, starting with the single currency, as always, as the most significant, as it is turning in negative. The near-term structure turns negative, as we can see on the hourly chart, that pullback from yesterday's fresh high at 131.25, dipped so far to 130.41. This is our initial support after sliding from through 131.00. Basically, these are the levels previous high of 3rd of December and the low of 4th of December. It's offering for now some support, but overall negative tone that is seen on the 1 hour chart, with indicators slightly starting to point higher, but bearish crossover 20 over 55 days at 130.68 now caps the upside at this moment. Basically, this is still seen as corrective action, as initial support has been cracked but not cleared, and 130.31, 38.2% retracement of the up leg from 159.60 to from 128.79 to 131.25 still stays intact. I would say this could be seen as a trigger. Negative tone seen still on the hourly chart, and the descending indicators on the 4-hour one are still seeing a room for some stronger corrective action. Of course, most of the investors will be in sit and wait mode until seeing what will ECB officials say today on the press conference, as most likely the action will not take part today in any rate change. But of course, comments from ECB President Mario Draghi will be quite interesting. We already mentioned this, and most likely we might see some more quiet trading until banks come with their today's verdicts and releases. In any case, further reversal, lower corrective action, as I said, still could be described as corrective, sees immediate focus down on the 130.31 and then more significant 130.00 previous high, psychological support, and the approximately 50% retracement of the uplift from 128.79 to 131.25. It's also reinforced by 4-hour chart 55 days exponential moving average, and I would say any deeper dips should ideally be contained at this level in order to avert some stronger pullback and possible slide below 130 that will reactivate 128.90 and then more significant, 129.50, which is 38.2% retracement, and more significant is approximately 129, 128.80 zone that is seen as a breakpoint of the larger rally from 126.60 to 131.25. Just to summarize, we're still in the uptrend with the current move seen as corrective, and likely, actually, ideally, any dips should be contained at or above 130.00 to keep the immediate bullish structure in play, as larger bulls are still focusing upside barriers and the key levels at 131.38 and 131.70. What we commented yesterday, that this barrier is quite tough, and further hesitation ahead of this level cannot be ruled out at this point, as we are facing now the first pullback of 131.25 just ahead of initial barrier at 131.38. Brief look at the strength of the outlook for the 4-hour chart. Bears are now taking control, while in hourly they are fully in play for now, while daily ADX is still showing a bullish structure intact of 126.60 low of 13th of November 2011, and still keeping the upside in focus as this pullback is seen corrective. Ichimoku studies daily cloud top is at 129.80. This is the support I was mentioning previously, so this is reinforcing the support in case of a deeper reversal. British pound, just put the chart on. Okay, in consolidative, I would say at this point mode from 161.29 2 days ago high, with the 160.80 so far holding the downside ahead of a more significant 160.50 level that is the previous congestion tops, and should we lose this 160.80, then immediate focus will come down to 160.50, and close to it is also the bull trend line support of bull trend line from 158.35 low of 16th of November. 4-hour structure is still positive, slightly descending indicators, but hourlies are now in the negative territory and still seeing risk despite the current bounce. We need to see the clear break above 161 and probably regain of 161.19 in order to confirm the higher low that was hit at 160.77 and the open way for a fresh attack towards the upper barriers 161.29 and the 161.74.78. This is the double tops of 1st of November and 17th of October 2012. These are our initial supports. Broken trend line, the broken bear trend line of 163.08 again at approximately 160.50 reinforces the stronger support, and basically holding above this level keeps the immediate bulls in play, as we have the previous 3 attempts unsuccessful at this point, now reverted to support, trend line support, bull trend line support, and the broken bear trend line that is offering quite good base for reversal and a possible extension higher. Again, no significant changes expected today from the Bank of England's release, but most of investors are likely going to await and see what will be the decision of the Central Bank of United Kingdom. Dollar yen is slight improvement seen on the bounce from the range base at 81.71 2 days ago, with 82.61 reached so far, approaching the upper boundaries of the range. As we can see, the range is clear here. 81.70 and 82.70, 80 levels are the boundaries of the range, with the upper side now coming under pressure as a slight improvement seen on the 4-hour chart. However, break above 82.74 and 82.83 is required to confirm the positive stance and resumption of the uptrend from upleg from a 79.06 low of 9th of November 2012, and of course to refocus 83.00 as our next upside target. Still, this is still could be seen on a larger picture as daily chart shows bigger picture rally from 77.12 mid-September's low is now undergoing the consolidative action of 82.83 with less than 23.6% being retraced so far. So we are still talking about a stronger consolidation rather than any more significant corrective action. As said, near-term structure is positive and is focusing upper boundaries, but of course a failure to break 82.74 and 82.83 would still keep the pair within the range and leave it in the sideways movements. Break above, of course, to signal resumption on the downside. The immediate support is approximately 82.30 and then more significant at 82.00. Yesterday's intraday low and the round figure support, while the key support is 81.70 double bottom and the range floor, better seen on the 4-hour chart, loss of which could be a signal for some stronger corrective action. This also marks the range, the break below the range floor would open next downside targets, and the Fibonacci supports 81.39, the 38.2% retracement, and 81.00 approximately 50% retracement, and the higher platform of mid-November 2012. And finally, dollar Swiss from the currencies that is still lacking strength and momentum to clear 93.00. We can see the two attempts higher in past couple of days unsuccessful, but keeping the downside protected, at least averting immediate risk of testing recent low at 92.39. As the structure is slightly aligned towards the upside, we have series of marginally higher highs that still keep hopes of a possible attack at 93.00 as initial and 93.39 as the next barrier in order to signal some stronger recovery. The hourly studies at this point are rather neutral and flat, while a 4-hour structure is gaining some traction but still lacking a momentum for a more significant movement that is required to clear 92, 91, 55 days moving average that is currently capping the any upside action, 93.00, and another more significant is the low high of 28th of November, also 38.2% retracement of the down leg from 93.39 to 92.39, and basically if we see the break above this level, initial 93 and 93.40, then we will be seeing a more, will be seeing some more corrective action. Otherwise, overall negative tone in the slide of a recent peak at 95.11 posted on 13th of November still sees downside firmly in focus with 92.39 past 2.5 months consolidative range floor seen in the near-term focus, break of which, of course, to a signal resumption of the larger downtrend from 99.70 yearly peak of 24th of July and open 91.50 and 91.00 as the next downside targets. Any further consolidation will just keep the pair within the range, as only regain of 94 as one of the significant levels close to which is 200 days moving average would provide relief and avert immediate downside risk of testing a 92 zone. Otherwise, more focus is still seen towards the downside. And as we said, the commodities are again under pressure. Gold continues to trend higher, to trend lower as shown on the 4-hour chart that gives the best outlook. Basically break below 1700 support. This was also a previous triangle support, keeps the focus on the downside with a series of fresh lows posted in past couple of days, resulting in the fresh low yesterday at 1684. That marks approximately over 76.4% retracement of 1672 to 1752 ascend, and basically the main focus now comes to 1672 low of 5th of November 2012. This is also 61.8% Fibonacci expansion of the down move and the wave from 1752. This was basically our initial target. Initially we had the 1687 that was briefly tested yesterday, and now we are talking about 1672 as our next target. Break of this level is definitely to confirm the end of the corrective action from 1672 to 1752, and open next downside levels. 1661 is the 200 days moving average, and the 1655 approximately is 76.4 Fibonacci expansion. A negative tone now, it's coming on the daily chart as indicators broke below their midlines, seeing quite good potential for a retest of our key near-term support at 1672. On the upside, the dynamic barrier 1701 is the 20 days moving average. Of course, this is part of a strong and previous lows, as well as psychological 1700 support, along with 1705 and 1708, seeing the upside capped for now. Any break above, I would say 1710 could delay immediate bears, but a more significant corrective action requires break above minimum 1722 and 1730 in order to refocus the upside barriers. Otherwise, we'll be focusing 1672 as our next target in the near term. And finally, crude oil again lost traction following upside rejection at 90.31. That marks the channel top, and further sliding following yesterday's as a recovery from 87.57 up to 89 level. That was the top of the recovery, and then fresh slide lower now is attacking the lower boundary of this range. 87.47 seen so far, with the 4-hour indicators now showing turning into the negative territory, and most likely further extension lower could be the likely scenario. The bounce on the hourly indicators might be signal for some mild recovery, with the good barrier seen at 89.00. Any break above 89 is to improve the structure. Otherwise, we might see the renewed attack at 87.47. That will open way down towards 87.20, 50% retracement. Basically, break below this level is seen as a trigger for a deeper reversal, and to confirm that to confirm top at 90.31 and open way for a possible extension down towards 61.8% retracement at 86.44, and 85.89 is currently the channel support. I do apologize. That could come on risk. Basically, bleak situation in the world economies, and still no solution, despite President Obama's comments yesterday that a solution for the fiscal cliff should be found within a week time. With the increased tensions in the Middle East, that are one of the main drivers of the energies. For now, seeing a quite negative outlook for the crude oil, and as we can see, despite some recovery seen of 84 base, the price is still lacking strength and momentum to more significantly correct the recent 172 to 84.00 slide. And in case we stay below 38.2% at 90.40 as our reference level, then we might see some more pressure towards the downside, of course, with the quite negative tone seen in the world economies and the increasing tensions in the Middle East countries, seeing not much prospect for possible recovery of the crude oil price, because the main driver, actually main negative driver in the pressure on the oil comes from the current crisis that is seen on the fears of reduced demand for the energies due to the crisis that is spread worldwide, and especially in case of not finding any solution for United States for the fiscal cliff, then we might face some stronger pressure on the oil price. That was all from my side. Please, any questions, you can submit them now. Okay, no questions. In that case, I would like to thank you all. Keep an eye on today's releases, especially the central banks. We might see some stronger action in the markets. Invitation for tomorrow's session at the same time at 8 o'clock GMT. All of you that connected later and missed any part, you can find this session and all other sessions with some other analysis in the YouTube. Our page is called the Window Brokers Forex. Until tomorrow, I wish you a nice day and very successful and profitable trading. Good luck.